So I've had my eye on a few different stocks for a while now, and I just pulled the trigger on one of them and finally added it to the portfolio, which is a very bittersweet thing because on one hand, this is one of the most perfect companies I think I've ever come across. So I'm happy to finally be a shareholder. But with that said, my timing couldn't have been worse because this stock is currently sitting at an all-time high. Despite that, I still think this is a fantastic investment, and I'm excited to share some of the reasons why in this video. But before we get to that, guys, I want to hear from you. Leave me a comment below and let me know what was the most recent stock you added to your portfolio. I'd love to hear about it. And now for the moment we've all been waiting for. The stock that I added to my portfolio was Visa. I've been teasing this one for the last couple of weeks, and I've got to say, nothing gets by you guys. You know me pretty well. To be fair though, if you follow my portfolio on Blossom, which if you don't, you definitely should, there's a link to Blossom in the description of the video, then you'll already know that I added Visa to the portfolio because I've been posting about it over there for the last couple of weeks. And I know, guys, I know I'm extremely late to the game on this one, and like I said, I'm basically buying Visa at all-time highs. At the time of recording, Visa is sitting at a whopping $263 per share, and as we can see, the share price is up over 20% in the last 365 days. And furthermore, if we zoom out over the last 5 years, Visa has done really stinking well and is up over 90%. And the last time that we saw Visa even remotely close to these levels was back in 2021, where it peaked at around $250 per share or so. At any rate, guys, I've spent the last couple of months really diving deep into Visa, and I took extensive notes on the company using my Dividend database, and I'll be sharing all of these notes with you guys sometime in the near future, so stay tuned for that. But the thing about Visa was the more that I researched it, and the more that I learned about the company, the more that I felt that I needed to have it in my portfolio. Valuation be darned. It had surpassed the point of being a mere want, and I feel so good about owning this company that I'm willing to buy shares at the highest prices that we've ever seen, which is typically something you'd want to avoid if you can help it. The thing is though, I have no idea what the market is going to do from here, and I have no clue which direction share prices will go in the short term. But I think that across a 10, 15, 20, 30-year time period, shares of Visa will be worth more then than they are today by a considerable amount. And so I feel okay at least starting my position here and just taking it slow. And my plan moving forward is to buy one share of Visa every single week for the next couple months or the next few months until I build out this position a little bit more. And on that note, taking a look at my Visa position on my Dividend portfolio tracking spreadsheet, which you can start using for free. There is a link to download this spreadsheet in the description of the video. So far, I only have 3 shares of Visa, and my average cost is sitting just below $260 per share. And I started this position a couple weeks back, right after Christmas, as we can see from my purchase history right here. Going back to the spreadsheet though, I still have a decent amount of cash sitting on the sidelines ready to be put to work. And over the coming weeks and months, I plan to put the great majority of that, if not all of it, right into Visa. I figured that with all of that cash, plus my weekly contributions, plus my dividend income, I should be able to add at least 10 shares of Visa over the next couple of months. And I'll tell you what, I would not mind if Visa were to become my largest position. And don't get me wrong, you know I love me some Starbucks, some Procter & Gamble, some Realty Income, Johnson & Johnson, but Visa is unlike any other company I've looked into, and I think there is so much to love about it that it's going to be hard to condense all of that into just one video, which is why ultimately I want to share my research notes with you guys. But anyway, for starters, let's go through a brief overview of how Visa makes money, because although we've all heard of Visa before, it's one of the world's most recognizable companies, not a lot of people actually know what the business does. Now, in a nutshell, Visa operates as a global payments network connecting financial institutions, businesses, and their customers. Visa exists to help facilitate transactions between these parties, and a typical Visa transaction looks something like this. A customer will make a purchase from a merchant or a business using their Visa card, and the transaction data is then transmitted to what's called an acquirer for verification and processing. An acquirer is the term that they use to describe the merchant's bank or payment processor that verifies whether the payment is legitimate. From here, VisaNet, which is the backbone of Visa's network, facilitates the transfer of funds and data between acquirers and issuers. And if you're the customer in this situation, then the issuer is your bank. Visa will then talk to your bank, make sure you have the ability to pay for whatever it is you're buying, and then facilitate the transfer of those funds while collecting a fee in the process, and that's how it makes money. Put more simply, when customers buy something from a business, Visa will check with the customer's bank to make sure it has the money to make the purchase. If it all checks out and the customer has enough money, then Visa helps transfer that money from the customer's bank ultimately to the business's bank. Having said that, Visa itself is not a bank, and Visa actually doesn't issue credit cards or debit cards. That's all done through your bank, which partners with companies like Visa or MasterCard, and whichever logo is on your card will tell you which network that payment is going through. And out of all of the different networks between those two and others like American Express, Discover, or Capital One, Visa and MasterCard really are the top dogs by a long shot. And between all of them, Visa has the largest network with 4.3 billion cards in circulation versus MasterCard, who has 3.2 billion cards. In the last few years, digital payments have become more common than cash payments around the world, and we're likely to see this trend continue to grow as time goes on. Visa, being the top network out of the bunch, operates pretty much like a toll booth company, just collecting those transaction fees. And the sheer size of their network is a huge competitive advantage that will benefit them a lot as time goes on and the number of digital payments continues to grow around the world. As more merchants, banks, and consumers join the Visa network, the value of the network increases, which creates a flywheel effect where a larger network attracts even more participants, which then reinforces Visa's dominance in the space. And with that, the global scale of Visa's network allows the company to process an enormous volume of transactions very efficiently, and the cost per transaction actually decreases as the volume increases, giving Visa another advantage. This occurs because Visa has certain fixed costs associated with maintaining and operating their network, and as the volume of transaction increases, those fixed costs are spread across a larger number of transactions. The more transactions that are processed, the lower the average cost per transaction becomes, which at this point allows Visa to basically print money. If we take a look at Visa's income statement, we can see that pretty much everything is going up and to the right. Their sales are growing, their gross profit is growing, their operating income is growing, and if we scroll down a little bit more, we can see that their net income is trending in the same direction as well. Now, not only is everything growing for Visa on an absolute basis, but because that average cost per transaction is going down, Visa is actually becoming more profitable over time. Looking at the gross profit margins, these were high in their own right starting 10 years ago. Back in 2014, they already had a 96% gross profit margin, which is insane. But we can see over the last decade, that has increased just a little bit more, and now they're even closer to 98%. Furthermore, if we scroll down looking at the operating margin, this is increasing as well, looking at 64%, 65% about 10 years ago or so. And then fast forward today, that's increased even more to just over 67%. So that's growing as well. And then scrolling down once more, looking at the net income margin, this out of the bunch has seen the biggest jump, going from like the low to mid 40% range about 10 years ago to now over a 50% net income margin, which is just, there are no words to describe this. It's impressive to find a company with a gross profit margin over 50%, but a net income margin over 50%, forget about it. And as I'm sure you can imagine, Visa's free cash flow has been trending in the same direction as pretty much everything else. And I mean, 10 years ago it was about $4.8 billion in free cash flow. Fast forward to today, we're looking at $16.7 billion. So it's almost quadrupled over the last decade, which definitely bodes well for the dividend. And on that note, jumping over to the dividend stats and taking a look at all of this, starting with the forward yield, which is probably the biggest blemish on Visa. This yield is pretty much nothing. It's 0.8%, which if you're a dividend investor, this is definitely not going to be that exciting. And actually, you probably will look at something like that and say, Ryne, this is not a dividend stock. How could you call Visa a dividend stock? And I know, guys, shame on me, such a big deal. But everything else here looks incredible. I mean, the payout ratio is very low, just above 21%, with plenty of room to contribute more to the dividend. And like we saw a moment ago, this is a money printing machine. Visa's got a lot of money to throw at the dividend if they want to. And they've been doing a great job of growing this dividend. Even though the starting yield's not that high, the 5-year growth rate is incredible, 16.27%. And they've been making dividend increases for the last 15 straight years. I love to see that. And because that dividend growth is so high, over the next 10, 15, 20 years or so, my yield on cost with this position should be looking pretty sweet. And to give you an idea of what that looked like, if you would have bought Visa 10 years ago back in 2014, at the start of 2014, your yield on cost today would be 3.72%, which is much more manageable than 0.8%, but it takes time to get there. And that's primarily what I'm investing for. As a dividend investor, it's not so much about the yield today, it's what it will look like 10, 15, 20 years down the road. And that's also why I feel comfortable buying shares of Visa today at $260 per share. I think the company will look better in the future than it does today, and I think its financials and its position in the marketplace give it such a strong competitive advantage that I think it'd be really hard for someone else to come in and render Visa obsolete. However, it's always possible and it still could happen. There's a lot to love about Visa, but it's not without its risks. And if there was one reason not to invest in Visa, in my opinion, it would be that. It would be the risk of some alternative payment method coming in and taking its place. If there's a mass adoption of some other payment method that can bypass Visa's network and Visa isn't able to adapt to that, then it will, in effect, render the company obsolete. Additionally, another risk for Visa is regulation risk. As global payment systems like Visa involve numerous jurisdictions, changes in law and regulations in any of these areas could impact the the company's operations. Furthermore, given Visa's size and share of the overall market, the government could step in if they ever feel that there are certain antitrust issues with the company. We actually saw this happen a couple years ago when Visa tried to acquire Plaid in 2020. The DOJ sued to block the deal, alleging that it would limit competition in the payments industry, so that's definitely something Visa's up against. Also, at least right now, if you're buying shares of Visa like I am, then you as the investor are exposing yourself to some valuation risk. Like we've already talked about, Visa's share price is the highest it's ever been, and buying at the top, at least in the short term, could be problematic. Having said that, I still think the pros of owning Visa outweigh the cons by far, and I'm kicking myself for not exploring this company sooner because I think it's a truly fantastic business and is a great one to own, unlike the 3 stocks that I'm telling you about in this next video right over here. In this one, you'll learn about 3 dividend stocks that many investors like to buy, but truth be told, they are terrible investments and you should avoid them at all costs. So click right over here to learn more about that, and I'll see you in the next one.